Now, this is Business Morning. We're coming to you live from Channels Television, broadcasting from Lagos. If you just joined us, you're watching Business Morning on Channels Television. And don't forget that you can tweet at me at Biz Morning. If you can send your comments and questions, we really appreciate that as we begin a conversation, which is on revenue generation in Nigeria. We're examining the issues and challenges that being faced by the federal government at this point in time. We all know that the oil prices in the international market has been sliding. The price of oil has been sliding, and that has been some kind of concern for Nigeria at this point as to the next fiscal year's budget. That's budget 2015, which we have the benchmark crude was pegged at $78 per barrel. I think oil prices right now is just above $85, if not lower. So there are fears and some kind of concerns that if this figure drops further, we may have to make some adjustment back home. We've been joined in the studio here in Lagos by Bayo Durodola. He is an economic analyst with BGL Asset Management Limited. Thank you, Bayo, for coming on the show.
You're welcome, Bolaji. It's my pleasure.
And from our Abuja studio, we've been joined by Gbenga Odeyemi. He is the Chief Operating Officer at Atacov Services. Thank you, Gbenga, for joining us on the show.
Thank you. Good morning.
Okay, I'm going to start off with Bayo. The revenue of Nigeria may be affected negatively if oil prices continue to fall. What's your reaction to this development, to this story?
It's a truism because the metrics are there for us to see, and I'm perhaps going to say that it's not really surprising, and the truth is even the government knows, because the fact that the critical risk factor for the economy of Nigeria year to date has always been the fact that the possibility of a precipitated oil drop in oil has always been there. And we know this 6 months ago, we know this 1 year ago, and we always know this. There's always been a debate in budget decision making in the National Assembly. We could recall that at the point we were deciding to take 77.5 per dollar as a benchmark in 2013, this issue were there, and basically the truism is there. Unfortunately for us, we've practically done really nothing, or to be modest to the government, very little things on this. Again, we must realize the fact that shifting the economy from oil-based to something that is more non-oil-based is a longer-term thing. And so in that regard, we have to perhaps say, okay, a couple of efforts that are putting in place may not or may not yet be coming into the open or into the public, but the truth is, we're here right now, and we should begin to look forward. And the major concern should be how long, or to what extent are we going to have this drop? Is it going to be something that is going to be shorter time? Will it be something that we could see for the next 2-3 months? Will it remain with us until the next year? And the truth is, concerning the fact that what are the fundamentals, and the question to ask ourselves basically is, what are the fundamentals driving this drop? Critically, the major issue is the fundamentals of the oil market itself, and it becomes more clear. I mean, it becomes clearer when we realize that this fundamental has defiled the geopolitical issues in the Middle East, which usually in the past, whenever we have this, it tends to come to our advantage with price going up, and Nigerian, we remember the Gulf oil windfall and the rest of that. Unfortunately, this time around, the market is experiencing a glut. And the recent estimate shows that at least on the average, that are at least around 1.4 million barrels per day of glut in the market. And the truth is, everybody knows the simple law of demand and supply. Price is going to take a hit. And again, the sad part, I don't know whether to call it sad part, is that in terms of trying to estimate how long this is likely to be with us, is to try and evaluate exactly at what point will the price begin to change? The critical factor is what is OPEC likely going to do? Will OPEC begin to rail in supply to be able to, in the usual way, support prices?
We'll get back to the issue of fundamentals as to the way forward, again, in relation to what OPEC rather would do in this regard. But let me hear from Benga Odeyemi. Hello, Benga, if you can hear me. I just wanted to comment on the recent development in relation to falling oil prices in the international market and the likely impact on our economy.
Thank you. I think the major problem is not what is happening right now. Normally, whenever there is a crisis or there is crisis in the Middle East, can you hear me? Whenever there is crisis in the Middle East, what normally happens is that prices of oil do go up. And with what we are seeing these days, just like Bayo said, that the problem right now is that we have glut. So the price will surely drop. I think what we need to start doing is to start looking inward. Like it was in the olden days, let's say in the 50s, in the 60s, when the emphasis was on agriculture and non-oil or revenue sources. So I think that's what government should be looking at.
Benga, I'm going to stick with you. I just want us to look at the fact that we are beginning to see attention being placed more on the non-oil sector. Agriculture comes, to mind at this point. We've seen a lot of development in the sector, but that seems not to be enough at this point, and that's why the concern around the falling oil prices is being, being felt by the government itself.
Yeah, we need to look at it in two ways. First, is the government really ready to shift focus from oil to non-oil? We could actually see some development in the last few years. Let's say in the last 3 to 4 years, we've seen focus being changed to, more activities on the aspect of agriculture and all this stuff. But the concern is that maybe we are starting too late. Maybe this ought to have started a long time ago.
We're talking about the fundamentals that could be driving down oil prices. But aside the fundamentals, let's come back home in terms of what plans are we going to put in place. There is the story that the federal government is planning to raise the target for key non-oil revenue agencies for next fiscal year in order to insulate the economy against the fall in the prices of crude oil. Is this timely? Are we beginning to, it's as if we're just waking up to realize that, we need to do something very, very fast at this point?
Well, the issue for us is not, it's really not just coming around to begin to set target for revenue agencies. Because the question to ask is, setting targets, is that supposed to prod additional performance beyond the capacity or excess capacity that were there before that we never tapped? The question is also that in the last 3-4 years, how has been the performance of these agencies in terms of meeting even the target that we set for them? The third question is setting targets for these agencies the way to go, or to work with the fundamentals of the economy and build that fundamental such that it could support revenue? Now, setting targets means that these guys have to prioritize, run after it. We can try to understand, looking at this target setting from the perspective of a marketer who just need to meet a deliverable. And in this instance, I don't think the similarity is a lot like that. And therefore, the most important thing for the government to really do is to begin to, look back, like Gwinger said, into the basics of this economy and where our capacities in terms of advantage.
But that could take some time.
It's true.
Yes, we've begun to shift focus to non-oil, but that could take some time. That we still need to stabilize our crude receipts in terms of the income that accrues from crude sales.
You recall that I said earlier that unfortunately for us, these issues we have right now, it didn't just arise from anywhere. And again, the solution to the problem is going to be a more long term. You can't just wake up one morning and begin to change the structure of the economy from oil-based to non-oil-based. Now, the question to ask ourselves is that even the fiscal, the MTF that has been passed, sent forward, what is the proportion of oil that is inside that already? And what is the proportion of the other non-oil? And the target we are setting, is it changing that fundamental? No, as we already see the plan. The plan is there. The plan already says at the end of the day, oil is still taking 75-point-something%. So that to be frank, we are not already, the government realizes or knows that this is not the issue. The target is perhaps just to, I don't know, the percentage that it's going to have on the reality. So we should rather begin to think about this issue in a long-term way, and dealing with the demand side of, the government revenue demand side in terms of how is that money spent. Can we begin to refocus it? Take for instance now, how much of this revenue is, how much of this revenue is pumped into things that are pure consumptions, recurrent expenditure. This issue will always come up over and over again. Even the budget is saying we are having over 70 to 75% of that in recurrent expenditures, personnel and things like that.
Okay, let's hear from Binga. Do you think that setting targets for agencies will really work at this point?
What I think is this. I think in as much as the fundamentals are right, setting target is a very good, having a target is a very good start, in the sense that it will put everybody to be at their toes to ensure that, they achieve that target. But now, one thing is achieving the target. Another thing is trying to even monitor whether those targets are realistic. Because what we've noticed so far is that you see FIRS putting pressure on business owners because they have a target. But are they really seeing the economic situation of those of those businesses that they are putting pressure on? So setting target is good, but are there tools that will help to achieve this target? Are they available? That's what we should be looking at.
Agencies to meet
Achieving
up
those
with this target. That will be after the break. Well, I'd like you gentlemen to hold your thoughts. Alfaros Binga Odeyemi is the Chief Operating Officer at Article for Services in Abuja. He's been speaking with us from our Abuja studio. And here in Lagos, we'll have a conversation with Bayo Drudola, who is an economic analyst with BGL Assets Management. I'd like you to hold the thought for us. We're going on a break. I'll be right back.